So, what is the purpose of a risk based analysis in a fraud investigation or forensic accounting engagement, and specifically as it relates to our data sleuth process?
So, kind of one of the biggest benefits in doing risk based analysis is that you're going to prioritize your resources because even our big budget clients, they don't want to be just spending money on us going down rabbit trails, as we sometimes call them, or getting really in the weeds. So, risk based analysis is going to help you prioritize your resources to the highest risk areas. And then, kind of along those same lines, it helps with not getting on that path of diminishing returns as you really try to quantify every dollar of the loss because especially with most of our clients, their goals and kind of what the final outcome is going to be. If you're going to get some kind of restitution, the subject is probably not going to be able to pay that all back anyway. So if we just focus on the meat and potatoes of that particular case where we think the highest risk of fraud is, that's probably the best use of our time and the client's money.
Yeah, so we're going to get a little bit more into the um we'll get a little bit more into like the practical application of this. But in a risk-based analysis, and now that you're a CFE, so congratulations, that
Thank
happened
you.
last year, right? End of 2021.
Yep.
Yeah. So now that you're a CFE, you've probably seen the charts like I have that um, maybe provide like a fraud risk assessment for an entire organization. But a risk based analysis, in the way that we use it as part of the data sleuth process, is really more of a, like you said, a prioritization, but it's the prioritization of the risk of fraud in the case that we're looking at. So, like, um, the biggest bang for somebody's buck, essentially.
Hmm. Yeah, kind of a narrower view overall. And the other thing I was just thinking about too is that when we say risk based analysis, sometimes we kind of mean, or we can mean one of two different things. One is this kind of case planning, big case picture version of risk based analysis that we're talking about. And then another way that I kind of think of it is looking at it on almost an individual transaction basis, which transactions are highest risk once you're really in the weeds of the analysis. And so I know we're going to talk about that in a subsequent episode, but that's kind of another way that we focus on risk when we're working with clients.
Yeah, for sure. So, when we say risk, what are we talking about?
So basically, and I think we'll probably get more into what exactly this looks like in our cases and in fraud later in the episode. But I kind of think of opportunity as maybe a key component of risk. Where did the subject have? Because typically there's a subject that we're looking at. Where would they have had opportunities to divert funds? Essentially, that's it. Divert funds. Whether they were coming into your entity or going out. Risk is kind of going to correlate with opportunity, I guess I'd say.
So, in larger organizations, they're identifying all of these vulnerabilities to some sort of something that would be negatively impacting for the company. So
Hmm.
that could be more in like the soft skills area, like maybe publicity or social media or their position on something and how the public's going to view that. But then it could also be like, um, where could someone steal from them or misrepresent, I'm thinking of Enron, but like misrepresent how they're handling their numbers that would ultimately cause the whole thing to come crashing down.
Hmm.
So there's like, and I'm kind of overwhelmed, be honest, with enterprise risk management. So whenever we're talking about risk in this context, it's nothing that big. Like that's
Right.
not, we're not covering all risk within an organization. It's really what you said, like, where are the opportunities that someone could divert funds for their own personal benefit?
And it sounds so simple when you put it like that. Or I mean, that's really all we're looking for. There's a lot that can, look like and a lot that goes into that. But I think that's definitely a little bit more or easier to digest way
Yeah.
to sum up what we do.
And let's talk just a little bit more about the diminishing returns aspect of this, because a client has all the feelings when they come talk to us, right? And then as part of our case planning process, we try to create some priority. And that's where this risk based analysis comes into play, is to prioritize what is going to, I feel like this might sound a little bad. So we can kind of bounce this idea around just on the spot here, but we need to kind of prioritize what are the areas that are going to quantify the largest loss for the client first.
Oh, yeah, absolutely. And I was just thinking, what's that saying? There's some saying about like 80% or 20% of I feel like it applies to different like management type things, like whether it's people or like how you spend your time, like what your tasks, but like 20% of the tasks provide 80% of the impact, or, 20% of the people, whatever. I definitely think, I mean, obviously those are just random numbers, but that concept applies here too. Like often looking at, if we can focus on like 20% of all the ways that money goes into or out of a business, and probably like 80% of the loss is there, or like, is that making sense?
Yeah.
Like
Well,
if
and I think it makes sense too because the opportunity is in the path of least resistance for
Right.
the subject. So, like if I can steal money by just overpaying myself through payroll versus my payables process has like 4 people involved, but overpaying myself in payroll, like there's nobody stopping, like I have the ability to inflate my hours or put extra expense reimbursements or something like that, and no one reviews it. And so between me hitting send, funding it, and then it landing in my bank account, then that would make sense that even though that's only one component, like the majority of the loss is likely there, if not all of it.
And it just makes me think it's so common. And we talk about this in some of our trainings around turning case drama into a case plan, and just what clients tend to focus on when they talk to you. It's like everyone wants there to be a conspiracy or like a really elaborate scheme. Like those two things just really capture people's imaginations for some reason. But in reality, like that's probably not your highest risk area. If you're like the average small business, there's probably some process you have that like has a complete lack of internal controls, or was just down to this one person, that actually is going to be higher risk. And I think also, to your point about we're trying to capture most of the loss with the least, putting the least resources into it, we haven't really talked about this a lot, but I think the dollar amounts that you're looking at in different areas or different like fraud risks, it's almost like a multiplier. Like you want to look at where were the opportunities for money to be diverted, but also how much money are we talking about? Like if you're looking at a business and you can see, okay, well, there was an opportunity for them to, like, this person had check writing ability out of the business, but they also had a company credit card that they used. But like there's only $1,000 a month being put on this credit card, whereas like maybe the checks going out of the business are 10 or 20 or $30,000. I feel like that can be another component of our risk assessment and sometimes too, it doesn't always align with the client's sense of what's important, or like what really, a lot of times there's like a certain aspect of the case that just really bothers the client. Like they feel super personally wronged by it, or for whatever reason, like they just really want to tell us about that over and over again. So like in this example, maybe it's the credit card, but sometimes we just have to tell them, if you want to get the most bang for your buck, we can look at this for you, but that's probably not, and it's not that the opportunity wasn't there, but it's not the highest risk in terms of overall dollar amount.